Despite the usual closing bell cheers, many investors seem nervous. They hear talk of the Federal Reserve Board possibly not cutting rates this year. Key among those talking is Minneapolis Federal Reserve Bank President Neel Kashkari. He says cuts are still on the table, but
if we continue to see strong job growth, if we continue to see strong consumer spending and strong GDP growth, then that raises a question in my mind. Well, why would we cut rates? Maybe the dynamics that we have right now are actually sustainable.
Kashkari has a voice and some years a vote on a panel that influences the Fed board. It's called the Federal Open Market Committee. Fed Chair Jerome Powell says most of its members are more optimistic.
If the economy evolves broadly as we expect, most FOMC participants see it as likely to be appropriate to begin lowering the policy rate at some point this year.
But Powell's not promising a rate cut this year. He says the overall inflation trend is good, but recent reports are not.
On inflation, it is too soon to say whether the recent readings represent more than just a bump. We do not expect that it will be appropriate to lower our policy rate until we have greater confidence.
One of those bumps is oil prices hitting a 5-month high yesterday.
Both of those things together certainly delivered a pretty good 1-2 punch for markets.
I'm Kiley reporting.